Welcome back, investors. Okay, so today we're diving deep into the AST SpaceMobile first quarter 2026 earnings report. And look, if you've been tracking the stock at all, you already know there is just so much noise out there right now. So let's cut right through it and look at what the actual source material is telling us.
In the next few minutes, you're going to discover exactly how AST SpaceMobile is mapping out a very real path to a $1 billion revenue opportunity by 2027. We'll also cover exactly why management thinks their AI spectrum tech just totally crushes their legacy competitors. Seriously, sticking with this explainer is going to save you over 2 hours of slogging through that raw earnings call. We've extracted all the direct, high-value investment insights you actually need to see where this company is heading.
Here's our roadmap for today. 1. A billion-dollar revenue trajectory. 2. Leaving competitors in the dust. 3. Next-gen AI satellite tech. 4. Winning major defense contracts. And 5. The real risks ahead. Let's get into it.
All right, starting off with Section 1, a billion-dollar revenue trajectory. So if we look past their relatively modest Q1 revenue, which was around $14.7 million, the sheer scale of their war chest is what really jumps out. Management reported a staggering $3.5 billion in cash and cash equivalents as of March 31, 2026. This massive reserve is basically thanks to a 2.25% convertible note they issued back in February, which had a conversion price of $116.30. But here's the absolute crucial point you need to take away. ASTS is now fully funded to launch over 100 Bluebird satellites. They literally have the capital in hand to execute this vision.
And honestly, that vision is scaling up incredibly fast. While they are reaffirming their 2026 revenue target of somewhere between $150 and $200 million, management confidently projected a massive leap for the very next year. As their commercial networks expand and those highly lucrative U.S. government projects start to kick in, they're foreseeing a revenue opportunity approaching $1 billion by 2027. And what's really key here, they expect this to be high-margin recurring revenue. That is a game changer.
Moving right along to Section 2, leaving competitors in the dust. So, during the highly anticipated Q&A segment of the call, analysts naturally brought up the perceived threat of Amazon acquiring Globalstar. But CEO Abel Avellan didn't flinch. He pointed out that Globalstar's tech is, well, it's essentially limited to basic SOS emergency signals. They have very narrow spectrum capabilities. AST, on the flip side, is built from the ground up for true broadband. We're talking hundreds of megahertz of MSS spectrum, combined with spectrum from nearly 60 mobile network operator partners. And those partners, they cover over 3 billion users globally. Avellan broke it down for us, delivering hundreds of megabits of bandwidth directly to unmodified everyday smartphones from 500 kilometers up in space while moving at 70,000 miles per hour. It's incredibly complex. And right now, AST's technology is just noticeably leagues ahead of legacy competitors.
Okay, let's get into Section 3, next-gen AI satellite tech.
To really wrap our heads around how they're hitting these unprecedented speeds, let's look at their Block 1 Bluebirds. These things have already hit peak download speeds of 98.9 megabits per second, but during the call, management dropped a bombshell. They stated that pushing those peak rates to nearly 200 megabits per second doesn't even require their newest chips or AI software. The hardware that is currently floating up there in orbit, like Bluebird 6, along with the imminent Bluebird 9 and 10, well, they have the capability to reach these incredible speeds right now. No upgrades needed. They are fundamentally changing what we thought was possible with direct-to-device satellite comms.
Quick pause here. If you want to stay updated on the latest U.S. stock market news, make sure to subscribe to my channel. I upload new analyses every single week to help you cut through the noise and find the signal.
All right, stepping back into the tech. So while they can hit 200 megabits per second now, the real future of the company relies on their Block 2 satellites, which are entering production late this year. These bad boys are going to feature a custom ASIC chip that explosively increases processing bandwidth. We're talking a 10-fold jump from 1 gigahertz to 10 gigahertz. But here's the thing, raw bandwidth just isn't enough on its own. They're actually integrating edge computing and AI spectrum management to dynamically predict user traffic down here on Earth. The AI will smartly slice up and allocate power and spectrum within that massive 10 gigahertz pipeline. It acts as a massive force multiplier for their network efficiency. It's truly wild stuff.
But you know, getting these powerful satellites into space in the first place requires some serious ingenuity. Management detailed their patented composite technology, which they actually affectionately compare to tuna can stacking. Kind of a funny visual, right? But this structural design is absolutely vital to survive the immense G-forces of a rocket launch. Plus, it enables this brilliant launch vehicle agnostic strategy. Basically, depending on the rocket, they can stack them differently. They can put 3 satellites on a SpaceX Falcon 9, 5 on a ULA Vulcan, or even up to 8 on a Blue Origin New Glenn. They aren't tied down to any single launch provider, which is super smart.
Moving to Section 4, winning major defense contracts.
So look way beyond just commercial cell phones for a second. The U.S. Space Force is currently requesting a budget of over $70 billion, and ASTS is aggressively positioning itself to grab a piece of that pie. They recently secured 3 new contracts as a prime contractor, and they're actively participating in the Space Development Agency's HALO and Europa Track 2 programs. But the real prize? They had their sights set on massive, multi-billion-dollar programs of record like Golden Dome. And what is really fascinating to me is their dual-use capability. Management pointed out that non-communications applications, things like space radar, they don't even require mid-band frequencies. They can just utilize their existing low-band hardware. That means they can literally monetize the exact same satellite fleet for both civilian broadband and tactical military applications at the same time. Talk about efficiency.
All right, let's ground ourselves for a minute. Section 5, the real risks ahead.
Look, it is incredibly easy to get swept up in all these billion-dollar projections, but as focused investors, we always have to look at the complete picture. The first major risk here is their heavy reliance on external rocket launch schedules. Their timeline is super aggressive. They plan to launch Bluebird 8, 9, and 10 in mid-June using a SpaceX Falcon 9, begin that Block 2 production late this year, and have roughly 45 satellites in orbit by year-end. However, as they say, space is hard. During the call, management acknowledged the recent loss of Bluebird 7. This was due to an upper stage anomaly on a Blue Origin launch. Now, while they noted that this kind of thing is pretty common for early testing, and they were quick to emphasize that satellites 30 through 33 are already in assembly, it's still a really stark reminder. Just one bad rocket launch can severely delay that 45 satellite target.
Then we've got the financial volatility. Revenue recognition for AST is currently pretty lumpy, meaning it's heavily dependent on sporadic gateway deliveries and hitting specific government milestones. But more importantly, let's look at their capital expenditures, or CapEx. Because of some deferred launch payments, Q1 CapEx actually came in lower than expected at $257 million. But make no mistake, that bill is coming due. Management explicitly warned us that Q2 CapEx is projected to just spike massively, landing anywhere between $575 million and $650 million. So you can expect cash flow to be highly volatile in the near term.
Finally, we absolutely have to talk about unit economics and the supply chain. Management estimates that each new Block 2 satellite is going to cost between $21 and $23 million to produce. However, they issued a very clear warning to investors on the call. They noted that dynamic geopolitical factors present real and immediate risks to their supply chain. Since they're pushing hard for 95% vertical integration in their own factory, any sort of global disruption could heavily impact the cost structure and the overall rollout of this upcoming fleet. It's something to watch closely.
So, we've seen the massive $1 billion upside and some truly incredible AI technology today, but we've also weighed the very real launch and supply chain risks ahead. Now I want to turn it over to you. I've got 2 questions for you today. Question 1. Based on what we just went through in this report, do you think launch anomalies and geopolitical supply chain risks will end up delaying ASTS's goal of getting 45 satellites up by year-end? Let me know your thoughts down in the comments. And question 2. Which U.S. stock or earnings report would you like me to analyze for you next? Drop your requests below. Thanks so much for tuning in, and I'll see you in the next explainer.